Hello everyone, welcome to the Ichimoku charts.com hourly analysis for the SP 500 for Wednesday, October the 13th, 2010. Well, we had a nice rally in the market today, and we can see here from the first hour of trading we had a very large green-bodied bullish candle, and the uptrend continued for the next 1, 2, 3, 4 trading sessions with a series of higher highs and higher lows. Unfortunately for the bulls, though, as the trend continued on its way, the size of the bodies of the candles became continually smaller and smaller, and that warned of a change of trend. We had a very nice large green body candle, which meant that at the opening of trading, which meant that the buyers made some very solid net bullish progress. For the next hour of trading, they made net bullish progress, but certainly not as much as the previous, and then quite a substantial reduction in the amount the following candle, a larger amount, and then a spinning top type candle. And that spinning top candle warned that the market was perhaps ready to terminate the first time frame uptrend that the market was in. We then followed with a red body candle, and this was a candle with a small red body at the bottom of a relatively large shadow, and that represented downside price rejection. So it was the first candle where we saw the sellers taking control of this market. For the final hour of trading, they increased the amount of control they had. They showed some keenness to taking the market lower and showed some commitment. They actually changed the trend on this final candle. Now that coincided with this area of resistance around roughly 184, and we can see the shadows on the top of these candles as the market attempted to trade above there. So 3 times that area was tested, and the sellers came in to sell the market off, eventually changing the trend to the downside. Now we also had resistance around the roughly around the 181 level, and the market held up there slightly for 1 bar and then traded through there. In the second last hour of trading, the market failed to trade down through there, but today, in this final hour, the market traded down there with a bearish close down below. Now, we are still trading up above the cloud, and we have been for quite some time. We could see the bullish breakout around this level here. So the market retains its overall positive bias, and the market is trading up above the Kijun-sen and the Tenkan-sen, so the market's bullish in the medium-term and fast-term timeframes. The Tenkan-sen and Kijun-sen have actually turned flat, and that reflects the lack of upside momentum that the market had previously here. We could see here as the market was trending up quite nicely that both of these indicators were pointing up fairly sharply, reflecting the good momentum. As the market started to trade up around this resistance area and we started to get these small-bodied candles here with the shadows on the top, then the angle of both the Kijun-sen and Tenkan-sen started to become more shallow, reflecting the start of the loss of momentum. And now as the markets began to congest and then retrace, the Kijun-sen and Tenkan-sen have turned flat. And when they turn flat, especially the Kijun-sen, price action tends to be attracted back towards there. So it's very important for the first hour of trading tomorrow that we do watch the low of the current candle for the potential for this trend to continue to the downside. So the market is trending down on these hourly charts, and there is a possibility that the market will continue trending down. So that low, roughly about 178, becomes very important for the market. Now, if the market does continue trading down, then there is good, solid support offered at this level around 173. There's a previous level of support and resistance, and then also the Tenkan-sen is trading around there, so that will offer itself as support. Just down below there, around 170, we have support offered at the Kijun-sen, and it could be fairly strong support. Down below there, we have these 2 greyed out areas, which were zones of support and resistance, and that will offer itself initially the area from 161 to 164, and then another area around 153 up to 157 will offer a support. Below there we have support offered at the cloud, and then down below that we have a couple of windows that were open that haven't been tested yet and could offer themselves as support. To the upside we have resistance around roughly around 190, 191. So if this trend just does change to the upside again, if we do find support down around these levels, and if you see a return to bullish candles, if we begin trending down, we see bullishness coming in, then it could be a good area to perhaps buy for a test of these areas of resistance again. And if we see a bullish breakout up above here, then it's a very strong possibility that we might be testing 190 to 191.